What's going on, everybody? Welcome back to Prop for Match, your trusted resource for all things prop firms related. Today is another special interview with a little bit of a surprise twist. I'm joined here by Ben Sparham, who is a veteran trader with over a decade experience and the newest member of our Prop for Match family. So Ben, thank you so much for joining us today.
Happy to be here, man. I'm excited to get started and obviously be getting into it with you. So I'm really happy to be here.
Awesome. We look forward to everything as well. Obviously, being the newest member, I think we got to start right away with your experience, your background. Tell us a little bit about yourself for those who are meeting you for the first time.
Of course, yeah, mate. Of course, no problem. Yeah, so basically, I've been in the market for over a decade, like you said, about 13 years to be exact. Took a slightly unconventional route. So if we go right back to the beginning, I was actually from a sports background, personal training, working in a gym when I was like 19, 20. Wanted to have a change of career, change the industry that I was in. And fortunately, one of the guys that I used to coach has come to me for PT sessions. He worked in recruitment and finance in particular. And there was a small startup fund, $10 million under management. So small by fund standards, right? It's a lot of money, but small by fund standards. Yeah. And basically they was looking to build out their teams and stuff like that. So I managed to get me an interview and I managed to get a placement there as an account manager. So essentially what my role was to liaise and be the middleman between our investors and the trading desk. So, depending on certain updates and things like that, things that are going on and all that kind of stuff. Big communication, essentially. Now, although that role is obviously nothing fancy or trading related directly, that's what really kind of piqued my interest and was that first kind of glimmer into the markets and kind of what exactly the trading world is. And I was very lucky. One of the guys, Ken, who used to be on the FX desk, because there was UK equities and FX major crosses they used to trade. He kind of took me under his wing a little bit and kind of mentored me. So I would spend most lunchtimes with him and sort of any chance I could basically go and sitting on the desk next to him. And that's kind of really where my journey started. I was there for a couple of years. Started trading some of my own money, made all sorts of mistakes, which I'm sure we'll get into in a little bit. And then obviously went from there, worked at the Institute of Trading and Portfolio Management with former Goldman Sachs trader Anton Krill. Learned a ton there, obviously under his mentorship and guidance. And it's kind of just progressed from there, really. I've worked at a couple of trading floors, now managing my own capital and some private capital as well. It's been a slightly unconventional journey. I've had a glimmer and an insight into the professional and the retail side, and it positions me quite uniquely. But yeah, it's been an interesting ride so far, and I'm looking forward to the next 10 years.
That's very interesting, and that's amazing as well. And obviously being 10 years, let's say plus in the industry or with the experience, you've probably seen it all, seen a lot at least. What would you say was the major turning point in your trading journey?
Probably right towards the beginning, really. I've always had it kind of drummed into me. Obviously, being in that professional environment that you manage risk, and manage a bit more risk, right? It was kind of the realization of, yes, we're trying to make money, but we need to protect our capital. It's no good, making tons of money 1 year or 1 month or whatever, and then giving it all back. And this is one of the things I think a lot of retail traders struggle with, in prop and just their own personal accounts, is they're so fixated about how can I make more money. They forget about managing their downside. And, it's always about looking down, not up. If you've got a good system and a good strategy, whether you're swing trading, day trading, investing, whatever it is, the upside takes care of itself. Your job as the individual managing that account, personal prop, whatever it is to think, right, how do I mitigate my risk? Because there's always things that can happen that are out of your control. Some breaking market news that wasn't forecast or whatever it may be, things that can spin things, and you've done nothing wrong. And, you haven't done anything or deviated away from your plan, but obviously it can really kind of just completely throw all of your plans off, basically, in terms of the trades that you've got on. The biggest thing that was always instilled into me right from an early stage was manage your risk. And I think that was one of the biggest things for me throughout my whole journey, really, but especially at the beginning.
Yeah, when I say I wish somebody told me that when I first started, I'm not even kidding. Like, risk management is huge, right? In the beginning is leading to my next question that I was thinking about for you as well. But in the beginning, most of us, or at least in my era, we started with a personal account, right? And you don't know nothing about risk management. You throw in one lot because you think it's $1, things like that, right? And then all of a sudden, you're Hail Marying your account. You didn't even know it. I really wish somebody had told me that as well. I feel like that's such a pillar in the fundamentals of trading. Without that, it's just very difficult to consistently stay in the game. For example, for as long as you have. That's really, really awesome. My next question to you then is, obviously, again, with your experience and with what you just mentioned, what are your thoughts on, personal account versus prop firm accounts? And do they work together? Like, what do you think? What are your thoughts on that?
I think they can definitely work together. I mean, look, at the end of the day, it's all about building your own personal wealth. The end goal, long term, should all be about whatever your pots are, where, long-term investment, day trading accounts, all that, your pots, your accounts want to be as big as possible. And you want it to be all your capital, or as much capital that you can personally accumulate, right? But
Mhm.
obviously, what goes hand in hand with that is that there is a journey to get to that end goal and that final number, whatever that number is for you. And you want to try and get there as quickly as possible. So if you have the skill set, you want to leverage that skill set as much as possible. And that's then when the likes of a prop account come in and prop firms come in, because it enables you to go out there, apply your skill set, leverage it to make additional returns, basically. And you can now funnel those returns into personal trading accounts, personal investment accounts, and things like that. And you can utilize both of them. So I think they definitely go hand in hand. I think sometimes people maybe lean too much one way or the other. You get, we see this on social media a lot, right? People debating this
Yeah.
topic and, oh, you should all be focused on personal accounts. So some people are like, why would I risk any of my own money? It's just all about prop accounts, right? I think it's a bit silly to be one extreme or the other, but I think if it suits your style of trading, utilize both. It makes sense. At the end of the day, we're trying to make as much money as possible with a level of risk and volatility that we're comfortable with. So when playing that game, at the end of the day, you're trying to get your hands on as much cash as you can to put into the
Yeah.
market. So if it suits you, use both. I think you really should use both.
I agree, and I think that's an excellent point you brought up. Like you said, it's all over social media. Everybody's extreme to one side or the other, but both work. And so
Yeah.
now I'm thinking, what advice then would you give to somebody who's just starting out in trading?
I think they should, if we're looking at that, kind of off the back of that sort of discussion of prop or
Yeah.
personal, I don't think anyone just starting should go into prop, because at the end of the day, there's different rules there that you wouldn't
Hmm.
necessarily have if you're in personal cash. Don't tie yourself up with too many rules that are going to give you even more hurdles. I think you should probably start with a personal account, and you have to prove at the end of the day that you have the ability. If you
Yeah.
go try passing a prop fat challenge, even if you get lucky and you fluke the challenge, you're only going to lose the account later on anyway. So you're just going to be wasting cash. I always think everyone should always start with a small personal account. Has to be real money, in my opinion, because then you can learn to
Yeah.
control the emotional elements and things like that that come, with trading real cash. But start with a small personal account. Practice with that,
Hmm.
back test, get a mentor, do whatever is right for you to build and acquire that skill set. And then when you feel comfortable, then start sort of, adding the prop firms on top of that. Start using and leveraging that skill set that you've acquired and built to now go
Hmm.
ahead and go into the market basically and say, right, I now know I can trade because I have a bit of a record here and I have proof is in the pudding kind of thing, right? I have that skill
Yeah.
set there. So now it's about me just trading with as much cash as I can. Well, rather
Yeah.
than me putting another £500 into my account, for example, why don't I buy a couple of challenge accounts? Allow for the fact that maybe one of them I just get a bit of bad market conditions or whatever it may be, and the market moves against me. But ultimately, at some point, I'm looking to get a bigger cash pot that I can basically trade with, leverage that, and then you can siphon off profits into a personal account. That's probably the way that I would go about it if I was starting
Hmm.
fresh again today. At the end of the day, everyone's different. That's just my opinion on the
Hmm.
matter. But I would probably say that's, in my opinion, the route to probably go down.
Again, I agree, and that I think that's great advice. That's essentially what I had to do. Like I said, I started with the account. Everybody at that time, like later on, was trading prop firms, and to me, I looked at it like it's a skill issue versus capital issue. So I did kind of like as
Mm.
you said. Anyways, not about me. We're listening to you today. So that's great advice. That's great advice. No, it's real great advice. I'm reflecting on some of the stuff you said. What do you think is a concept that a lot of traders overlook?
I think people are normally too they're rushing for the result rather than focusing on the process. I think
Yeah.
we see this a lot. They're always people are like, well, what's the best strategy, or how do I get a payout as
Yeah.
quickly as possible? And all these sorts of things. Take a step back, focus on acquiring a solid skill set that is repeatable over time. And in order to do that, you have to build a well-rounded understanding and a well-rounded approach. So, we
Hmm.
spoke about risk management there earlier on. You can have the world's best strategy, but if put that with a bunch of crappy risk management, sure, you might get lucky this week or this month, but you're going to blow up at some point, right? And vice versa. You could be the best risk manager in the world, but if your strategy isn't proven and it doesn't make money, you just lose money slower, basically, right? So
Yeah.
you need to become a well-rounded individual. This is also why I say, start trading with a small pot of your own capital rather than it being a demo account. It might only be a couple of £100, dollars, euros, wherever you're based, but you still then got that emotional and psychological elements within you, because sure, it might be up or down only a couple of pounds that day, but it's real money. Something in us that's
Yeah.
like, oh, I don't want to lose that money, right? It enables us to start working on that. And I think become a well-rounded individual. Don't just sit there thinking, technical patterns, technical patterns, technical patterns. Understand what's moving a market. It's not to say you're going to necessarily trade trade based off of macro and fundamental analysis, but understand what's going on in the world around you. So when you're applying your technical strategy, if that's the strategy for you, you still understand maybe the best and worst environments and when you should or shouldn't be applying that strategy. So you're trying to
Hmm.
find a balancing act between this. And the way that you do that and you become more accomplished in that methodology is to become a well-rounded individual. So I think too many people are rushing for results. I would say
Hmm.
focus on the process and become a well-rounded individual, become well-versed in all things markets. You may not trade the stock market, for example, but understand what's moving the market. How does that
Yeah.
correlate with currencies? Because obviously, if you're a currency trader, asset classes correlate. So you may not trade the US stock market, but depending on what's going on over there, how does that correlate with the dollar, which you do trade because you trade
Hmm.
major dollar crosses, right? So
Yeah.
become well versed in everything that's going on around you. And I think too many people, they're just looking for that one magic thing that's going to be like, boom, now I go and make money and I make $1 million trading prop accounts. And I think too many people try and shortcut in that way, you know?
Yeah. Yeah, I agree. I think you've mentioned some great gems there as well. And that prompted a question in my mind because you talked about which I feel like fundamentals is almost becoming a little bit of a lost art because like you said everybody's just so into the technicals, but you're correct. You
Mm.
should be well-rounded. So now I want to ask you about news or macroeconomic events. Like what's your take on news? Should traders be trading the news or not? What's your stance on that?
I think it depends on your trading style. I always say to people, imagine a sliding scale. And over here, we've got 100% fundamentals and macroeconomics. And this side, we've got 100% technicals. Now, depending on the type of trader that you are, you'll probably kind of slide that scale one way or the other. So let's imagine
Mm-hmm.
you're somebody that takes long-term positions. You're in positions for weeks and months at a time. Well, you're going to probably go a little bit more this way to the fundamental element because those long-term macroeconomic trends and things like that are what's going to be the catalyst for moving different assets, right? If you're more of a day trader, well, the macroeconomic trend over the next 6 months doesn't really make any difference to you, but you still have to understand what's driving markets overall because then that helps you gauge the sentiment of the market, which may be obviously understanding where the short term trends are developing. In both cases, both elements come into things, but I
Mm-hmm.
think it just depends on how much or little you use each. Now, when we then talk about individual news events, we tend to find that one news article or news release,
Mm-hmm.
generally speaking, unless it's something really unexpected, it just kind of creates some short-term volatility and then we don't really end up going anywhere right after that. Or it initially spikes and then over the next day or so it all kind of undoes and those positions unwind. And I think this is where people make the mistake. You hear people talk about macroeconomics doesn't work. Well, it's because you're looking at today's news, what came out, what did the market do 20 minutes later? Macro
Mm-hmm.
matters when we're talking about where's the market going to go over the next 3 months or 6 months or 12 months. You know, where the bond market is or where the currency market is in 6 months has
Mm-hmm.
nothing to do with what trend line you drew today, right? It's about the macroeconomic factors that are the
Yeah.
catalyst for driving that market.
Yeah.
However, if you're looking for a particular setup and entry on top of an idea, well, those technicals now could be absolutely key for you to pick that timing and that entry. So it's not that one is better than the other. They go hand in hand, and then how much you
Yeah.
use of each is going to be important. And I think, again, that's where a lot of people go wrong. They're looking for
Yeah.
the technical strategy because the technicals are a lot more sexy than the macroeconomics, right? If we was to have a
Yeah.
conversation and talk about chart patterns and things like that, people would want to listen to us all day long. If we start talking about interest rates and the monetary policies, going on over in the US, everyone's going to be
Mhm.
asleep listening to us because
Snooze
they're going
fest,
to have no
absolutely.
interest. Exactly, right? But they're just as important as each other. So I think
Yeah.
it kind of goes back to what we said earlier on, become well rounded as a trader.
Great advice. You talked about a lot of things that again has me thinking and remembering a lot of stuff. I was thinking about when I first started again when you were speaking, trading the news and stuff like that. I don't know about you. I've blown some accounts before, obviously. And first time it happened to me was news, right? I had no idea what news was. I was just focused on the technicals, went into the market. All of a sudden this candle goes crazy, you lose all your money. And sometimes in those moments, you know what I mean? You feel like quitting or you feel like the market's against you. So I want to ask you now
Yeah.
on a bit of a personal level, have you ever felt like quitting trading or just, throwing in the towel when it comes
Uh,
to trading?
I don't know about quitting, but there's definitely been some tougher times. And then you sit there and you're like, right, okay, maybe this style of doing things isn't cut out for me. I'll give you a good example. I mean, nowadays, the position that I'm in, I tend to be a little bit more relaxed with the way that I manage my money. So a lot of my capital is predominantly tied up in longer term investments, right? But I also know I'm not the best market timer in the world. Some people are very good at it. I'm not the best market timer. So I'm generally better, and my performance generally tends to be better when I take a slightly longer view and my entry doesn't have to be as pinpoint. Does that make sense? I know that that's just a strength and a weakness of mine, with those two elements there. So there's definitely been times in the past where I've been trying to be more accurate, I guess you could say, with regards to my
Mhm.
timing, and getting very frustrated that I would try to be a little bit more pinpoint, get stopped out, the market goes in my favor, and it's like, right, if I'd have just not tried to be so perfect there, given the market a little bit more room to breathe, maybe a wider stop and things like that, my idea was perfectly correct, and I made money on my idea theoretically, but I lost money
Yeah.
because my timing was bad. So
Yeah.
there's definitely been some frustrating times, 100%. But it's always been, I think, because of the environments that I worked in and stuff like that. I was very fortunate to have a mentor to constantly lean on, essentially, during those
Mhm.
tougher times, and continue to refine my process. So I was lucky I had that support around me, really.
Yeah, that's very relatable. Obviously, as you said, you tried to be a little bit, more pinpoint accurate when it came to your entries, and then you realized maybe I should have just stuck with it in the beginning. I want to ask you this now. Do you believe in fixed trading strategies, or do you feel like traders should adapt?
I personally believe you should not just sit and trade one strategy. And I know that goes against what some people say online. You get a lot of people say, look, master one strategy and that's all you need. And it's like, well, yes, theoretically, it's kind of right, because, there's absolutely nothing wrong with just trading one style. But there is a caveat that goes with that, is that all strategies are going to perform better and worse in different market conditions. And we've got no idea when those
Absolutely.
market conditions exactly are going to change and how long they go on for. Prime example of that would be, up until the situation with COVID and things like this, we had like a 12-year period of markets just being perfectly bullish and just kind of going in one
Hmm.
direction because
Hmm.
interest rates were low, and it was just the perfect environment for growth. Now, if you'd have back tested a strategy over the last 10 years, sitting there in 2020, you'd been like, oh, this is the best strategy in the world. It's the only one I ever need. Well, all of a
Hmm.
sudden now, the last sort of 4.5, 5 years now have been very, very different, because we've had higher inflation coming down, interest rate cycle up, now obviously moving lower. Markets have been moving very differently to what they had done the 10 years before that. So that strategy now may be struggling a lot. Now, it doesn't mean
Yeah.
it's a bad strategy. It just doesn't mean it suits this environment very well. So theoretically, you could continue to use that strategy. It maybe just sort of underperforms a little bit, but then it goes into maybe a golden period again, and it makes you a lot of money in the future. But the reality is, most people are going to sit there and be like, sod this, the strategy's broken, it doesn't work, I need to use something else. And in
Yeah.
my opinion, that's why it's normally pretty good to have a couple of strategies and a couple of ways that you're allocating your capital, because then it's almost like you're diversifying within strategies, right? This one maybe isn't performing so well this year, but this strategy is doing very, very well and is performing well. So it kind of gives you that balancing act. So when people talk about diversification of a portfolio, you can diversify within strategies as well, and they can really complement each other. So I think, in my opinion, that's probably the better way of going about it. But some people would think
Yeah.
other ways.
Some people, like you said, may look at it differently, but I agree with what you said. I personally have more than one strategy because you learn as traders. Every trader I've ever spoken to, whether through interview or just on a one-on-one basis, they all have some way of adapting to the markets, whether it's through different strategies or something else. So that's, in my
Yeah.
opinion, that's fully factual. Coming back to your experience now of how you started, you mentioned it was a little bit unorthodox. You mentioned you have experience in so many different things. I want to talk about your experience on the trading floor since you kind of got
Mhm.
thrown into that environment.
It was a really, really good experience because, like I say, I was very fortunate. I had somebody there that was willing to spend the time with me and go through what they were doing, right? It's, some days obviously would be busier than others and they couldn't sit and, have a chit chat all the time. But you're getting an insight and a first-hand experience of the ups and downs of different strategies, how markets move on different days, the way they structure a portfolio. So they would have long, short portfolios, some of it longer-term positions, some of it shorter-term positions, and obviously long and short in terms of, directional bias and stuff like that. It was really eye-opening to be able to see all of that and be like, right, this like a whole other world out here in the way that money works, because obviously my experience up to then, I was just working in a gym, right? So my only experience with money was that you got paid and you put it in a savings account, right? It was never that you put it into the market in any way, shape, or form. So it was
Yeah.
an incredible experience, and one that really launched my career effectively. So although I wasn't there as a trader, because of course I hadn't come from a trading background, it just elevated my trading experience and stuff like that tenfold. And obviously that comes
Yeah.
down to the fact that someone was so willing to spend the time, because obviously if they there wasn't, then I would have just sort of been in my role there and only had a little insight, but not really had the support, and probably would have just dabbled a little bit, but not really had anyone to kind of teach me. So yeah, it was absolutely invaluable experience.
I can only imagine. That's amazing. Like being in an environment like that, number one, is amazing. And then having somebody who kind of mentored you along the way definitely
Mhm.
is like the cherry on top. How quickly did you find consistency then with your experience and how things went?
Not as quickly as you'd probably think, considering that I was sitting on a trading floor. I'd say I had easily a good 6 months or so of sort of struggling and going back and forth. But a lot of that came down to my own silly mistakes. So the sort of things that, all traders are going to go through. That thing of, you're starting with a £500 account, for example. Actually think about £400 was my first account. You make a couple of percent that month and you've made £8. That's not even an hourly rate of my wage. What the hell is this all about? What ends up happening, you go, oh, I want to make £8. I want to make at least £50, right? So now you start risking more. And of course, that's when the market goes against you. And so, you do all those silly things. I think I blew maybe 2 accounts when, back
Mhm.
in the early days of like, a few £100 at a time. And so you still do all the same silly things. And sometimes I think just as humans, it's almost like, someone says, don't touch that, that's hot. It's almost like you have to touch it and burn your fingers to almost prove to yourself that, oh yeah, no, they wasn't lying. And so you kind of do the silly things and you lose money. And you're like, right, okay, so I can either continue to do this, do the silly stuff and keep losing money, or I could just go, right, I need to do things properly. And the way that I make more money is continuing to kind of compound these results, add to the account where I can, go about it the right way as I'm being taught to do, and not falling into the silly traps and having the FOMO and all this kind of stuff. And like I say, it was probably a good 6 months or so until I really started to get consistency in terms of how I was applying myself, which therefore led to more consistency in my results. And you're always going to have ups and downs and drawdown periods
Yeah.
and stuff, no matter how long you've been doing it. But it's enabling to kind of ride out those drawdowns, mitigate the risk, minimize the drawdowns along the way. That's all you basically get better at, essentially.
That's very interesting hearing you go through your experience and stuff like that. You would, sometimes when you hear people have been on the trading floor, they think that they didn't go through what everyone else went through with your emotions and risking more and things of that nature. I'm glad you shared that. It gives a lot of other traders a realistic perspective of basically we all kind of go through the same things. You know what I mean? So that's pretty awesome. Again, with your experience, how would you say your trading has evolved over time?
So I think when I was sort of younger, I definitely kind of traded more actively. I think some of that was because I was also trying to, kind of grow and compound my account a bit quicker. I think as it's evolved over time, and I've been fortunate enough to have obviously earned more money and accumulated more capital and stuff like that, in terms of
Mhm.
just my investments have compounded over time naturally. Obviously, there's no such thing as completely passive, but a lot more passive in terms of I'm not actively day trading all the time, is what I mean, right? So, it's a case of, like I said earlier on, probably a good 80% of my capital nowadays is allocated to longer term portfolios. I have a blend of, sort of some that's like 100% long, index funds and stuff like that.
Yeah.
I have multi-asset portfolios where I'll trade stocks, bonds, commodities, currencies, and I'll have different weightings depending on my macroeconomic outlook, but they're longer term positions, so they're not chopping and changing on a regular basis. And then I have a small pot of cash that is there that's for shorter term opportunities when it suits my schedule, or when I feel the market opportunities are there where I can be present to try and act on those shorter term opportunities.
Mhm.
I have that capital there, but it's a smaller pot relative to my overall investable capital. Basically, it's definitely evolved more in terms of being more hands off, I guess, over time.
Just a follow-up question on that. Do you think that helps with your psychology at all? Do you think like having your portfolio diversified? Because with a lot of retail traders, they're fixated on one account, trying to maximize and scale that one account. You have your capital in different places. Do you think that helps with your psychology and how you trade or manage your capital?
Oh, 100%. A prime example of that is, when we get NFP, first Friday of each month, and
Mm.
everyone's
Mhm.
stressing out, oh, I need to have my positions managed before then and try and get rid of my exposure. I just kind of don't need to do anything because my positions that I'm holding for 6 months at a time, it makes absolutely no difference, this one piece of
Mm.
news, right? I think it definitely helps in so many ways, that the fact that I don't have that additional stress. But I always think as well, it's, that always then ties into the sort of risk and volatility that you're willing to have. So a prime example of that, and I've had conversations with people on social media and in with family members and stuff like this. If you was talking about, right, you want it to be really hands off, what is the best returning investment you could make? Well, historically, it's been to put it into an index fund and just let it compound away at about 10% per year, reinvest all the dividends and stuff like that, and just do nothing basically, and just let it
Mhm.
kind of keep compounding. We know how difficult it is for a lot of people to outperform that. Now, that's great, but the risk that you have with that is that the same as investing into any one asset class, same as property or wherever you put your money, if it was in one asset class, you have that potential risk of having a large drawdown at some point or a large period of underperformance, shall we call it, right?
Yeah.
The same as if you only traded currencies, there will be periods of times where the market will just go sideways and you just kind of sat there doing nothing. So there's always going to be these down periods if you're just stuck in one asset class. Most people, that's not going to be comfortable. People will look at the last 50 years of the S&P and say, oh, look, it's returned 10% a year. It's outperformed everything. It's great. Yeah, but would you have been able to sit there when it was down 50% in 2008, when it dropped
Yeah.
36% in
Yeah.
2020, when it dive
Yeah.
bombed in 2001? Would you have actually been able to ride that out? You're looking at the end
Yeah.
number, but all of this bumps along the way. We know the statistics show us that most people don't, people that are invested in the index underperform the index because they do silly things at silly times. So the way that you get rid of that stress and reduce the potential for silly mistakes as well is to diversify, because if you're in different asset classes, i.e. currencies, bonds, or wherever it is you choose to diversify, different asset classes are correlated and uncorrelated in different ways. So an environment
Yeah.
that could be terrible for stocks could be fantastic for currencies and bonds. So if you're able to diversify now, it could actually be very fruitful for this part of your portfolio. So now instead of having a 50% drawdown, your overall capital might have actually only drew down 5 or 10%, or maybe even made money, depending on how you're weighted, right? So by diversifying, you reduce the stress, you reduce the volatility, and it just makes things a lot easier. So I think it's about finding that healthy balance.
That makes a lot of sense. And, listening to you talk, it keeps showing me that you have quite a bit of experience in this from the beginning to the end, from getting thrown in there to what you've become now, to diversifying your capital, adapting your strategies, lots of experience. And so here's my next question to you. Seeing all that you've seen in the last, let's say, decade, what's your view right now on the retail trading space or the retail trading environment?
I think one of the biggest issues that we have is a lot of people's mentality coming into the markets. And I think that's partly not all down to the individuals that are coming in. I think, we see a lot of lifestyle marketing and all the sort of stuff that we see on social media nowadays. And that's not just unique to trading, by the way. We see that in all
Yeah,
areas, right?
everywhere.
Property or fitness gurus and whatever. But unfortunately, that then creates a false narrative and people think, oh, I can just learn to trade euro dollar on the 1 minute chart and now go and make $1 million, right? And I'd love if that was the case. It would be brilliant. But
Yeah.
unfortunately, that's not how it works. One of the biggest hurdles is now trying to get people's frame of mind right when they're actually coming in to start things, right? But those of them that do, they have a whole new world that people never had 10, 15, 20 years ago, right? I.e., if you've only got £1,000 to your name that you can put into the market, so maybe you start trying to learn with a couple of £100 and you invest a couple of £100 in some education or whatever. Then you get comfortable, you then test with another couple of £100 and you go, right, I'm now 6 months into my journey. I'm being pretty consistent here. Now let me invest the rest of this money into now getting some prop accounts and I can now leverage this skill set. That's a whole opportunity people never had even just 5 years ago or so. So it's a very interesting time in the space. I think it's tougher than ever in some ways in the distractions and things that we have.
Yeah.
But it's also easier than ever in other ways. If you do things right, launchpad that you can basically have
Yeah.
nowadays is crazy. It's really weird. It's almost like we've got these weird scales that are getting really heavy either end. So it's like there's loads of positives, but also more cons as well. But yeah, it's a very, very interesting space. But I think, look, if somebody's willing to apply themselves in the right way, then look, there's more opportunity than ever. So it's a fantastic time to be a retail trader.
Agreed. Agreed. All right, let's end it off here. I asked you earlier what your advice was to somebody getting into trading for the first time. What I want to end off with is this. Since you've had experience on both the floor, you've had your own personal trading, and you're in the prop firm space now, what's your advice to traders coming into the prop trading space?
I would say if you're coming into the prop trading space, treat it as a business. You're coming into this space because you're saying, right, I'm looking to take the next step up now. Now, if you had a small business, I mean, it was a side business, and you're now making that decision to say, I want this to be my full-time income, there's a whole now new level of responsibility and stuff like that you've now got to apply to make this work. Treat that first step into the prop trading space exactly the same. You've been trading your personal accounts, you've proven yourself, you have a winning system, but that doesn't now mean that you've now got a jackpot like lottery ticket by opening up a bunch of prop accounts. You've still got to approach it in the right way. So I normally say to people, and obviously this is one of those things, it's just my opinion, right? But I normally say to people, don't rush it, start small. just get a 10K account to begin with, or a 25K account. Prove yourself with that first step up and that first challenge. And look, if you make some mistakes that you can now learn from, it's not been that costly either, because it's only obviously a smaller outlay to get those challenge accounts. Now, once you feel comfortable, right, we'll now go and get a 50K account, get a 100K account, build yourself up over time. Don't now sit there and say, I've traded my £250 account for the last 6 months or 3 months. I feel pretty good. I'm going to go and buy a challenge account for a 200K evaluation, right? Just take it easy. I think if you're serious about this, you can make a lot of money, but it doesn't happen overnight anyway. So
Mm-hmm.
why try and rush it and create additional hurdles for yourself? Take your time, build yourself up slow, approach it in the right way, and then you'll be able to leverage the opportunity that prop firms present rather than
Mm-hmm.
it becoming more of a hurdle for you in your overall progression.
Excellent advice. Ben, this has been a very fruitful conversation. And the best part of all this is that those of you watching, you're going to hear more as Ben is now joined the Prop for Match team. So you'll get to see him share his gems, his knowledge, and his wisdom over the years in many different ways. I'd like to thank you so much for your time, Ben. Thank you so much for joining us today.
Thanks for having me, man. I'm looking forward to making more content with you in the future and sharing more bits.
Likewise, my friend. Everybody else watching, thank you so much for watching today's episode. Don't forget to like, subscribe, and comment down below your favorite part of today's video. And as always, we'll see you in the next one. Take care.